Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, daily charts first. And, you just have this narrowing range up here. And that's pretty indicative that a resolution is going to be coming. Which direction? I don't know. And let me clue you in on something. Neither does anybody else, no matter what you might read or see today, or the tea leaves that somebody wants to do, or if they want to sacrifice a live chicken or whatever. You don't know which way resolution's going to go. And the nastiest part about resolutions like this is they tend to head fake in the opposite direction and then go. And the bandwidth is not mission critical. It's 5.22. It's nothing to get excited about. You got your upper band, 4,013, lower band 3,809. It's not something where I'm coming in and telling you, the bands have cratered, you got this thing going on. It's not like that. We're just kind of trucking along. But in the very short term, it's kind of starting to narrow there. And it makes for pretty tight trading during the day. We were able to get 2 or 3 really good ones off yesterday. But then around it was a lot of whip and a lot of chop, which tells you it's very indecisive. And that's okay, because out of indecision, out of compression comes expansion. So hourly chart. You can really see the hourly band starting to get compressed. You can see it much better on the hourly what's happening. So Monday, Tuesday, and so far today, just very narrow. You can see in this moment, it's about 8:45 when I'm doing this, the bulls are trying to push it up. The hourly mid band is going to be important today. That's sitting at 39.49 and change. You got still have the pre-FOMC price down here, 31.5. Weekly pivot hasn't got a look. The 9 days at 28, daily mid bands down there, 39.08. We'll have to see. If the bulls are going to take it higher, they need to hold the combination of hourly mid band at 49, volume weighted average price, which right now is about 49.5, daily pivot 50.5, proprietary moving average just tucked under 51. So those numbers for us, they acted as a bull bear chunk of price yesterday. We were short on breaks below, we were long on breaks above, and we did our best to try to stay out of the choppy fray in between. There have been periods of time, I would say the last 5 sessions or so, where we have just declared that between this price and this price, we're not going to trade. Call it a no trade zone. And we just let them, basically consume themselves. And then when there's a move on the edges that either converts the top of the range to support or the bottom of the range to resistance, we act on that. And that has saved us a lot of reentries, a lot of commission, a lot of, just a whole lot of paper cuts and the whole pain in the ass in trying to deal with it. And what we found is, in coming out of that zone, we tend to catch 80% of the move anyway. And by skipping the first 10, 15% of that move and all of the BS that's associated with it, it puts you in a better frame of mind. It makes you better prepared to trade that next move when it's ready to go. So that's one of the things that we do in the room with a lot of success. All right, so we'll see what this wants to do. Maybe we consolidate another day, although it's getting awfully tight on the hourly chart. We should get at least one good move today. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come learn how to trade this stuff with us. Want to be consistently successful? Come on and give us a try. Take care. Talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.